that way, when we make that first phone call, it's questions: where do you feel comfortable with your monthly mortgage payment? How much cash do you have to put down? Do you have any cash to put down? Are you a first-time home buyer? Is this a second home investment? So you get to ask some questions up front. So when you start that pre-qual, you know what direction you're headed with them. And then, of course, so you can either send them the link to apply, you can get their info on the phone. It's quicker if they do it online. They can upload their documents to the portal, which is secure. Generally, it's pay stubs, bank statements, W-2s, tax returns if they're self-employed. And then we can wrap it up, and then that's when we can send you guys the pre-approval letter. Then we can also send them estimates to show down payment, cash to close, whatever the current rate is for the program and join. So that's a good way to hand off. Text the information. A lot of people just text their contact now. You tap on it, give them a call. Their emails are in there. So these iPhones work really good for passing on some leads.
Yeah. I'm also the same boat as them too. I think having the text message to start with the realtor, but also us as the lender, is an easy way for everyone to be in the know. Sometimes if you have clients just say, "Hey, could go give any of us a phone call." That phone call could be 4 or 5, 6 days after the fact. And realtor, you guys have done well. Have you spoken to the borrower yet? Yada yada. So I think a text message to start is an easy way to get the ball rolling. As they were touching on too, some folks prefer easy application online. I love doing in-person stuff as well. Get folks in the door, build some rapport, and kind of go that route.
I think a group text can be helpful too as we move along and you're out actively showing homes. It's an easy way for a realtor, lender, and client to stay on the same page, or share, "Hey, we're going to look at this address. Can you run numbers? We need a letter." That way, we can kind of stay in constant touch throughout.
Guess I'm a little bit different, a little more old school. I prefer a phone call. No, I mean, I prefer to hear from the agent first, and you can shoot me a text as well. But y'all work with them for a while now before they come to us, or at least a couple of days anyways, to y'all know what they do, what they prefer, kind of method of communication, things of that nature. So I'd like to get to know borrower, but from your perspective, then I'll pick the phone up and call them and see if I can get them on the phone. And then if there's some trouble getting them on the phone, then we'll reach back out and then we'll start communication that way. But outside of that, I prefer my stuff done either over the phone or in person compared to the online application, just to help you get to know the borrower a little bit more. But that's just
I definitely think phone call from the agent before passing the referral is important. But when you're connecting us with the client, that's when email and text is helpful, because the client knows they're kind of on the hook because the three of us are in communication. But getting a phone call heads up, "Hey, I've got these people, this is their story, and I'm going to connect you." I think that's the best way to kind of round it all out. Do y'all have any questions about that part of the process before we go over what we've brought for you guys? No?
I'll ask a question. Like Will said, first hear from the realtor first. What information can we give you other than just their name and number? Just kind of their relationship? Should we ask any pre-qualifications for your pre-qualification?
Not necessarily. You don't have to go into that much detail, but just to get a feel of how the borrower likes to communicate is probably the main thing. And then, their work schedule sometimes a little bit different than what we know. So if I pick the phone up and call them 9 o'clock in the morning, are they going to answer, or is it better call them in the evening, first thing in the morning, things of that nature?
Yeah, I think just generally, like their best availability, best way to reach out. Are they first time buyer, repeat buyer, just any kind of bullet points. Nothing too specific.
I guess the other big point as well is when we run our numbers, we can always run them for whatever. But if you have an idea of what price point they're looking at or what house you're thinking about showing them, we can narrow it down to show them, hey, look, this is a price for them to house you're going to go see. This is what county taxes are, because working on the county is a little different, things of that nature.
Yeah, I mean, you don't have to know all the ins and outs of their income and their down payment and all that, but any information you have, are they self-employed? Are they moving from out of state? Are they about to inherit money from their grandma? Those are things they are probably mentioning to you when you talk to them. Are they a veteran? Do they have a house to sell? You probably know a lot of that. So that's where that initial phone call is helpful. And then the warm connection, and by the time we talk to them, we're not starting from square one. Sometimes if they're self-employed, you might know they've been self-employed for 15 years, or they actually just started last year, so we're really just planning for the future. That sort of stuff. All the buyers are in different stages, and we all probably work with buyers all the time. Some that are ready to go tomorrow, and some that are hesitant first-time buyers or repeat buyers that have had life changes, trying to figure out how to achieve their next goal or their step-up home. So all that information is stuff that they're going to tell you more relational information, but we like to know that too. So any detail you have about them is helpful. Do they have kids? All that. Have they recently had a big life event, a marriage, a divorce, a death in the family? That sort of stuff is important because it helps us ask some of the harder questions softer if we know that they're going through something or they have gone through something. So
Y'all create the initial relationship. We're there to back you up and then to try and create our own relationship with them as well. Because most of the time when people think of loan officers, you think it's just transaction. You're just going to do the loan. That's about it. We try to get to know them as well, but y'all have already started that process for us, if that makes sense. That's all we're looking for.
And it helps that we're local. I think a lot of people like that we're a local lender because you can see us, feels, and touches. You can come to our offices and you can get us on the weekends, which is very important in this market. You can get us on Friday night, you can get us on holidays. You know, a text helps with that. Hey, is it okay if they call you on Saturday or Sunday or whatever? And we jump in and say absolutely. So I do think that you have to stress the importance of a local lender when you have folks in your car, because it does make a difference when you present a letter from Rocket Mortgage with 60 other offers coming in, or a local bank that everybody's heard of. So that is a big stressor that we can't stress enough to back us up when they say they're shopping lenders. Well, have you talked to them on the phone? Is it all through email? Can you text them? Can you call them? So that we think is a huge advantage to working with folks that you all know and you get to know better. So that's one thing that I do really think should be stressed, is our availability.
Yep.
But you all should have one of these, and we're not going to go through it page by page. I'm sure you can read most of it, but there are some important pages that we think are important. You know, like if you have somebody in a car and you talk about maybe we're going to go buy a car next week, but we're also trying to buy a house. That's when you want to put the brakes on and say, wait, check with your lender first, because I could, I'm going to change jobs next week. All those things are big no-nos when you are trying to buy a house. Cars, changing jobs. You know, it's not that you can't buy a car or can't change jobs, but before you do any of that, definitely reach out and make sure that's something that they are able to do, because you'd be surprised, it does happen, and it can go one way or the other real quick. But this is a very good, and this can be customized. That something you can have out to your clients in your car as well. So if you guys are interested, again, just get with one of us. But we'll go through some of these, and if you guys have questions, just jump in.
Yeah, so the beginning talks about the steps of home buying, and some of these steps are similar to PQNC's, or there's like the purchasing pathway that we've got in most of the first time buyer classes. But obviously, you guys are typically making first contact with the buyer. There's some folks that do know to contact us first, but usually they're contacting you, and then the first step really is to get pre-qualified. So we're going to talk a little bit about. We talked about handing off a lead, but what do we do when we're pre-qualifying someone? A lot of folks are gonna say, well, do you really need all that right now? I just want to know the numbers. I want to know this or that. If they are ready to buy something, then yes, we need their credit report. We need their tax returns. We need certain things, because if we don't have that, it really doesn't matter. They could have a conversation that means nothing because there's a certain aspect in their file that maybe they didn't realize was important that they didn't tell us. So when we're looking at pre-qualifying versus a pre-approval, the pre-approval is going to be verified information with all their documents, taxes, bank statements, credit report, all of that. Your pre-qual is more verbal information, or what they fill out online. Gives them an idea of what they can qualify for, but they're not pre-approved at that point because we've not seen anything or put our eyes on any documents that can really hold any weight when we send a pre-approval letter. So when we are issuing a pre-approval letter, that's what it is. It's not a pre-qual. It says in the letter that we pulled a tri-merge credit report, which is we have a credit report with scores and information from all 3 credit bureaus, and that we verified their income and asset documentation. There are very few occasions where I've sent a letter without any documentation, and one was recently, the guy's borrowing like $200,000 for tax purposes, and he's got $9 million in assets. So I thought that was an acceptable case to send a letter without having his assets verified. That doesn't happen every day though. 99.9%, yeah, that's right, yeah. 99.9% of the time, you know, we need to see. Some people might think they're full time and that they make a salary, but we get their pay stub. They worked 38 hours last week, and then this week, you know, they're working 36 and a half. That income has to be averaged. So what they tell us on the phone might be different than what is verified with their documents. So it's really important to know what your lender is doing. Can you trust that letter? Is it verified information? Because small things can change their qualifying dramatically.
And I think from A to Z, once they apply and they upload their information or email it to us, however they do it, it generally takes us maybe 30 to 45 minutes, maybe up to an hour to really get the approval done. So it's not a long process as long as we've gotten what we really need to do the pre-approval. But once they send everything in, we can wrap it up pretty quickly, and then from there we can obviously shoot out pre-approval letters. We can send an estimate. So it doesn't take a long time to get somebody pre-approved. And you definitely want a pre-approval, like Abby mentioned, not a pre-qual. Pre-qual means you really haven't laid your eyes on all the documentation that could flip the purchase price from this to that pretty quickly. If you're not working a solid 40 hours a week, you do have to average year to date plus the previous year. So that certainly, we've all learned this, that can definitely change your income from what they said.
And different things like first-time homebuyer programs. Those, a lot of them are based on income limits. So having last year's pay stub, this year's pay stub, people might be like, gosh, this is a lot you're asking for me. But if we have all that buttoned up, then we might be able to get them into a program by knowing that up front that maybe we wouldn't have otherwise been able to offer them if we didn't have the exact numbers that we need to have. So we just have this initial list here of kind of what we would ask for. There's a longer checklist in the back of the packet, but that longer checklist is really all the initial documents we could ask for. These are the ones that would really be necessary. We really want their pay stubs or their leave and earnings statement if they are military borrowers, and we need to know where their money's coming from. So the next page is called being on a budget, and we're not going to go through all of it, but a lot of people don't understand how we get to the number we get to when we're saying you're qualified for this. I know when I work with folks, I rarely ever tell them what their max is unless it's a first-time buyer that really has to reach their max in order to be in the market these days. Usually it's based on where their comfortable payment is, and or where their agent says, hey, I think they can get what they want around this price range, that sort of thing. And we'll have those conversations with the borrower. But as far as what their max is or what we should be qualifying them for, you guys have all heard what a debt to income ratio is, and the numbers we use are based on their gross monthly income. So people might be comfortable with a lower payment because of where they're, where they want their budget, but we could qualify them for a payment that's $2,000 higher because we're actually allowed to use income that they don't ever see. So this next page goes over if you have someone that is into the numbers or you're curious, maybe you want to run some quick numbers. It sort of tells you the math behind how we calculate and how our automated underwriting systems will approve someone's monthly payment based on their housing expense debt to income ratio and their total debt to income ratio. And I want to talk about this.
Kind of with that as well. I try to avoid the whole maximum conversation unless they're to the point of they need it. But I try to kind of work backwards and go. First question is, what is your goal with the monthly payment? And sometimes their goals can be not in a correct or even possible realm of where rates are, price of homes, what have you. But I find exactly right. We've all heard that before, right? But I find if you kind of work backwards into what they're looking for, what their current liabilities may be, and then from there we can kind of tailor, hopefully a good budget for them and figure out the ratios that way to even avoid going to the maximum, because you can go to the maximum, but that's your gross monthly income. A lot of folks are not factoring in, stuff breaks, you've got moving costs, you're buying furniture. So if we can kind of work backwards to help them tailor their budget, without them even knowing it, it's a win-win.
So I guess in this market right now, I guess I'm a little bit different in that regard. So I'll go to the max. I mean, truly, we'll figure out what their budget is for sure, but go to the max because right now people are having to offer more than what the actual listing price is. So if they only, their budget fits $325, they got to offer $350. Can they still be able to afford that $350 payment, or figure out if there's ways that they can make it work in order to still be able to get the house that they fall in love with? So I guess that's the realm that I go to.
And I tell the agent too, this is their max. Don't go over X. If you're gonna overbid, this is their max. Because then it comes back to where they don't qualify for what they bid for the house, and then you have a little situation. I'll let you know. Do not go over this threshold.
Yeah.
You can say what you're gonna say.
Well, so the sheet about being on a budget, part of it talks about, allowing X amount for auto payments, credit cards, that sort of thing. So we also look a lot at like debt structuring in order to get folks where they want or need to be in this market. So if you've got someone who had some other day, they had $60,000 they wanted to put down and they really had to have this certain payment, but the house they were buying was going to put them higher than that. I'm like, well, let's use 50, take the 10 to pay off the $400 car payment that had a $10,000 balance, and then now the payment this is going to get you is not so scary because you've knocked off $400,000 of your monthly liabilities. We had the conversation of there were 4 years left on the car, so it's not like it was something that was going to be paid off soon anyways. It was 4 years left on the car. They weren't planning on selling it or trading it. So we talk about their lifestyle and are there ways to improve their monthly cash flow to have them in a more comfortable place to really qualify and be competitive in today's market. So we're not only budgeting for their housing payment, but we're looking at the big picture as well, because we don't want them to get into a house and not be comfortable making their payments.
Yeah, I think that the financial advisor hat is a really well set point there because, as Christine was talking about Rocket Mortgage earlier, those folks are just call center. They're going to get you what, the base minimum and get you out the door. We're going to be, looking to be creative and make this puzzle work as perfectly as possible for these folks so they aren't, stressing about how can I afford next month's mortgage payment.
This might be a question for later. I was just curious what support you offered when an agent was actually submitting an offer, because I work with lenders who I copy them when I send the offer, and they reach out and they call the listing agent and make sure to get them on the phone. Do you guys do that as well, or how does that usually work for you?
Great question. I base it off of what my agent is expecting or what they think is necessary. So I definitely call and try to help. I think that does help when you contact a listing agent.
It does.
There are other cases that the agent either doesn't want that involvement or some agents like more control than others. So it just depends, but I definitely follow the lead.
They ask, we do it. Sure. But like I said, everybody kind of does their business a little bit differently, but we are happy to call anybody to try to work up here like you guys are just trying to get people in houses and get them to the closest area. Credit score, that's, you guys can kind of read over this. This just kind of gives you a little idea of what your tax and credit score, good or bad, or different.
Because for us, we can go as low as a 600 credit score and still try to get up here for that.
And we also have a credit repair department, so if somebody does apply and their scores aren't where we really want them to be, we can send them off to our credit specialist, and she'll come back with a plan that says do A, B, and C, pay this down, get rid of this judgment or whatever, and she'll give us a time frame on, how long that's going to take. Sometimes it's immediate, sometimes it's a month, sometimes it's a year. It just depends on how bad the credit is, and then we can send that to the borrower and say, do this plan exactly as you see it, and then send us the documentation, and we can actually get their credit scores, like I said, depending on the time frame, up and get them moving forward a little bit quicker. So we do offer that as a service too. So keep that in mind. If somebody does apply, the credit's just not exactly where we need it to be.
But even if it is, and say we can get another 10 points higher, so it was 700, we need a 710 or something to get it to that next kind of level and get a better interest rate or something to help them out. We can still send it that way and give them more feedback if for that as well.
I think that sometimes the credit inquiry or the need for one can be an objection that may come up for your buyers. A lot of people are under the impression that having a hard inquiry done will really drive their scores down or impact them negatively, and that is not the case. Particularly if somebody has already talked to one lender and would like for them to use your preferred, they worry that a second one could really hurt them. So just one piece of information I can share is they do have 30 days to make all mortgage-related inquiries without hurting their scores. And then also you may have heard of your buyers having the experience that once they do have their credit checked, their phones start to blow up with calls from solicitors and spam online lenders that want to offer them a better deal, a better rate, and it can be up to hundreds of calls a day. They do have the option to opt out of that. It has to be done 5 days prior to the actual inquiry, but optoutfreescreen.com, if they visit that website, they do have the option to nix that.
Because it's bad. I mean, it's not just us, it's every lender in America. When you pull someone's credit, they get bombarded. Equifax is selling the leads, and they're getting bombarded with spam. It's terrible. There is legislation that our banking association is trying to get passed in Congress, but the act of Congress, we all know, takes a long time to get through. But just advising that we try to tell them too, but hey, you're going to get bombarded with phone calls. Just ignore them. But sometimes some people get 10, sometimes they get 100. There's no rhyme or reason, but it's very annoying.
Well, I went through all this and built my own house this past year. Got my credit report and everything for the loan. I had 250 phone calls within 2 days. So just kind of give you an example. It does happen.
I've heard some stuff recently about different products that will allow you to get pre-approved with a lower credit score. So I wanted to know, what's the lowest credit score that someone can have right now and still get pre-approval, even if it's whatever loan type?
For us, 600.
Okay. What's the loan product?
And you have to run it through automated underwriting as well. It looks at credit, assets, income, all that goes into the picture.
Mm-hmm.
So that doesn't mean they're going to get a loan. It means you have to run it through and still see if Fannie or Freddie or HOA can VA.
Right.
So,
is that an FHA loan?
Yes, ma'am.
oh yeah. Anything below, really, nowadays, to be honest, 700, 710 now is going to go FHA.
And it's all like Christine was saying. So if they've got a 600 and maybe they've got 10,000 in the bank after they buy this house, then that might be okay. But if they're pinching pennies and they're getting a gift and they're getting all this stuff, there is nothing that tells the automated underwriting system or an actual underwriter reviewing the file that they can make a mortgage payment. So that's what we really have to think about. It's not just, do they have this credit score or do they make this income? We look at the big picture. If there's all these overdraws on their bank account and their mortgage payment's going up $1,000 and they have a 600, then it's like, this is a little risky. But not everyone with a 600 operates that way. There might have been one thing that happened that they didn't realize. They co-signed with their mom and their mom stopped making the payments and it hurt their score, but they actually handle their finances pretty well. Everybody's different. So like Christine said, they might have a certain score that we can technically use, but that doesn't mean it's going to be able to happen. Anything under 640 is fatigued.
It goes to check for any credit score.
Yeah.
So the automated underwriting system is what we use through Fannie and Freddie Mac, get DU and LP. That basically gives us the go ahead to send out a pre-approval letter as long as we have all the documents there, all the correct information in there for the loan to work. All right. Now you might have a 700 credit score, but we got assets in there, that are $5,000. You're getting gifts and all that kind of stuff, or you missed a couple of payments that's showing a credit report. It'll go through all that and tell us. It'll give us a refer instead of an approved. So we have to, do something a little different. Just try to still make it work, but it might not be with the same price that someone else with 700 gets approved might be able to. So it just depends, and it's finicky. It really is. I mean, that's what we're going for.
Credit is really tightened up. It used to be in the old days, I could look at get your profile not even running through the AUS system, so you're good to go. I don't do that anymore because it's tightened up so much. You could look at somebody who can have a 700 score, DTI looks decent, but they just have some hiccups on the credit from a year ago or 2 years ago and doesn't like it. You know, your minimum, you're putting the minimum down, and it just doesn't like your profile, and it'll just come back and say refer eligible. And in certain situations, like on FHA loan, you can work with an refer eligible if they meet certain criteria. They have to have 2 months of bank statements. They have to get a verification of rent. They have to have a month or 2 of reserves in the bank. So it requires a lot more documentation. On a conventional mortgage, you cannot do that loan if you've been refer eligible. So again, that's where our expertise will come in to tell you, you know, they got some work to do before they can buy a house.
So we can't run AUS automated underwriting without a credit report. So folks that are wanting to get pre-qualified just to see and to make a plan, even if they're not looking to buy tomorrow, because we know the inquiry doesn't hurt their score drastically, right? It is important to have that credit report and be able to run AUS because we might be able to see what risk layer is going to take this from an approved to a refer. And it's not always a credit score. There's lots of things. I just made the reference to someone who co-signed with their mom in the mortgage, but I was doing a pre-call on the phone last week, and they were first-time home buyers. They didn't, you know, they had all this money. They were doing all this. Well, I pulled their credit, and a mortgage popped up. Well, she had co-signed with her mom, but she didn't understand that it was something that we had to use against her, or that it was even going to show up. So when they're trying to plan for their next purchase, how much they need to save and all that, the folks that are hesitant or don't want us to pull their score, a lot of times there's something that's going to pop up that might be a hard stop, or we might have to do a workaround. Or we might have to figure out, you know, because of what we see on here, AUS is calling for 2 months of payment reserves. And for them, that's an additional $6,000 in savings that they weren't planning on. So just encouraging your folks, like when they connect with us, that having all of the information is really critical, whether they're trying to buy today or in a year. We really can't give them sound advice without knowing all of the details.
And all this might sound a little rough and a bit kind of intimidating as well, but we all work together. We're in the same office, so we're all creative. So if we do get a referral on something that might, you know, we'll all work together to try to come up with something to make it approved to make it a better run overall. We're not just going to give up because we don't make money unless the loan closes. So, or we do our best to make it the best type of loan that we possibly can.
Do you guys know how long a pre-approval is good for?
90 days? 120.
I always tell people your report's good for 120 as long as your income, assets, that sort of stuff doesn't change. It's an easy fix. We repull and you're good to go. Their information with us is good for a year. After a year, we can access it and pull it over to a new file, but it would require more updating at that time. So, original report is good for 120 days.
So then you'll see some loan options back in here, and I think you guys are pretty much familiar with these, but these are all the loan options that we do offer. Again, depending on where they're looking at, there's credit score and all that. There's jumbo, conventional. The jumbo limits, I mean, they come from limits 766, 550. I believe so. Anything over that is going to be a jumbo loan. And just so you know, jumbo financing is a whole other beast altogether. It's just a lot more documentation and a lot more scrutiny to file because there are upwards of $1 million that we're lending. So we hear a lot. I could pay cash for this house. Why are you asking for all this stuff? Well, they're not paying cash, so we do have to ask for all this stuff. Their tax returns could be pretty complicated at times if they've owned several businesses, they've got paid ones. So just know if you've got a borrower that's got a lot of different businesses, they've got 9 of them and are not paying cash, we have to treat them the same way as we treat any other person that's buying. So we do, and I'm sure you guys hear complaints. They're asking me for this, they're asking me for that. We really try not to ask them anything more than the underwriter's asking us for. But we sell loans on the secondary market, and you'd be surprised how many times we'll sell the loan, and then they don't like how we qualified them. We don't like how we did the overtime or the income in general, and they send it back to us. And they say, why'd you do this, that, and the other? And we don't want to buy loans back. If you buy loans back, we get out of business real quick. So it's like I said, it's gotten tight out there, and investors are just scribbling these files left and right. They'll see one thing that they don't we try to give, and the underwriters try to get everything they can in the beginning, so it's sold, everybody's happy.
Third one as well, there's most different loan types on it, but every loan is underwritten differently. So for example, a USDA loan, right? I don't know if y'all have ever actually done on a house before. Great loan, 0 down, you're going to be a first home buyer, low MI on it, it's lower interest rate, all good stuff. But it's going to be underwritten a lot more critically than a normal conventional loan or an FHA loan would be. They're going to ask for a lot more documentations. Any little small deposit on the bank statement, they're going to ask where it came from, why it's there, things of that nature. So you might hear the borrower like, man, it's in a lot of conditions, but it depends on the loan type as well.
And then, I mean, some things, we send it in for, and for those of you who've never, don't know the back end milestones, right? We get the loan, we take application, collect initial documents, and it goes through underwriting. Underwriter comes back to us, and we have what's called a conditional approval. That tells us what we really need to document to finalize the loan. We get those conditions, send it back in, and there are times it opens up another question. So people are like, well, I got you everything you asked me for. Why are you asking for this a week before closing or 3 days before closing or whatever? The day before closing. It's because we fulfilled what we anticipated, what was requested. But there might be something on there, like, something random. A borrower's explanation about, does he have ownership in the company he works for? And they write on the explanation, no, I don't, but I work for my grandfather, right? You send that in underwriting, the underwriter comes back and says, I want to see his personal tax returns to verify because he works for a family company. So there's things like that. Everything that we get that we put in front of an underwriter can lead to an additional request. Now, we know the guidelines well, our processing team knows them well, and we try to anticipate those things before putting them in front of an underwriter. But the underwriter's human just like us, and they might perceive something a little bit differently than what we were trying to package up. And so that's why. It's not like we're unorganized and we're horrible and we can't get the loan done in time. It's that it's a process, and everything they provide to us is starting the review over again, essentially. So,
Y'all have any questions on the loan types? I know that's just a big one. Anything, just in general? For ranking offers or anything? No?
What is your preferred way of paying off a lead?
I would say a combination between what Will said and what you and Ivy said. I can't remember what he gave us. I like to call the lender first, say, hey, here's a heads up, here's what I got, blah, 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 I'm going to connect all of that.
All right, what else we got? You guys are a smart bunch.
No blushing.
yeah. So the rest of these are really just resources if you want to read through them, or you can share them with your clients. I know a lot of you, when you're talking to folks or setting them up on a search, whether you're in person or at home, you have your own way of getting their criteria. Some of you input it directly into their search as you're getting their request. But some people like to do it more manually, or it might help to have something more manually. So we have just a basic checklist that we listed here. If it's something that you want to utilize or put together in your own buyer packet, we can help you kind of customize it. But it's just a checklist, and these people can really think about what are their absolute needs. And you probably have your own version of it, but again, we have some of this stuff to just assist you guys in the process, document checklist, process checklist, that sort of stuff. So you can look through it and let any of us know if you want to co-brand any of these packets for you, or add any of these tools to your existing buyer presentation. And then the last thing I think we were mentioning we want to discuss and ask you guys asking questions about is source of down payment. I think the biggest thing I want to address is if you receive an earnest money deposit check that does not have the buyer's name on it, you need to call the lender before accepting that check. There are so many times when we try to verify and the buyer's like, well, wait a minute, I couldn't, I didn't have the money in my account, so my friend Venmo'd me the $200 so that I had enough money and I just paid her back. It's like, well, hold up, that's what I would say. We've got to make sure that it's acceptable funds and that it's not too late, because sometimes we can't put the EMD on the CD then hometown's got to refund it and do all this. It doesn't happen often, but it happens. So if you guys can just keep your eyes peeled, a lot of times they drop them at the office and they leave them with Betsy, and it's got all the right information, so it's deposited and everybody moves right along. And it's not till 2 weeks later when we figure out the money didn't actually come from their account.
Can I ask a question? You know, can people use cash to buy a house? They use cash, hard money to buy a house when they're getting a loan.
Like, not easily.
For E&D, for closing costs, for down payment.
They hadn't been a shoebox.
No.
You mean
Okay.
physical dollars?
So
It's not. It didn't. Cash for a loan has to be sourced. So anything out of a bank account, a retirement account, things of that nature. If you just have cash on your mattress and go use it for your EMD or for closing costs, you can't use it.
FHA at times will allow cash on hand if we can explain and attempt to document that where it's coming from. You know, they can't just pull $10,000 and deposit it into their bank account. That's what
We just prefer.
But FHA is the only agency that will allow for any sort of cash deposit that cannot be sourced if we can explain it well enough.
Well,
And who's, you know, everybody has their own interpretation of that.
No reason I say that because even though you might get a check from EMD, it could be a cashier's check down gone to the bank, hand the bank $4,000 in cash. They gave them a check and they handed it to you. We can't use it unless there's some sort of documentation. They could have sold something or something. We have a bill of sale, we can use it. But outside of that, we just straight up cash out of the mattress or something around the month.
And people do a lot of crazy stuff. We got someone who recently sold some gold and got like a bunch of money for it, but thankfully he sold it to like a reputable company. He's got all this certificate and stuff, and we can source that. But I mean, some people don't. They just might sell it at the pawn shop and get some cash, and then we don't know where it came from.
and Bitcoin's always fun when you're dealing with Bitcoin. Just so you know, you can get a statement for Bitcoin. I had a client that told me I can't get a statement, and I said, well, you're gonna have to, because he was using a lot of money. And you can get a statement for Bitcoin, but we see that not all the time, but it does pop up. So,
Oh my God. Any issues y'all have had with assets or down payment or timing that you want to ask us?
Any questions in here?
I have a curiosity question. How often is it that a buyer comes to you guys first, whether it's a repeat client or just someone that you know, and then you're tasked with connecting them back to the agent who got to you in the first place, or we'll find an agent for them? How often is that?
Way more common with past clients.
Because they kind of know the process and they got
Yeah,
something to do.
or folks that are familiar to the industry, or used to be in the industry, or but it's rare that.
More often than not, it's still from realtors.
Yeah.
oh yeah.
Just curious.
I do have a question for you guys. Throughout this process, what do you all expect from a lender or like to see from a lender in this process? With buyers? Anything y'all are particular on, you like to see?
Communication.
Communication, okay.
Yeah, like I love when they weekly communicate.
Yeah, briefly.
Yeah.
Great one. Great one. Anything else? Anything else? Comments?
Just options for the buyer,
Yep.
so they can see what they're paying out of
Yep.
pocket is based on X, Y, or Z. I think it's always good for them to have that information. They can make a decision that's informed to their needs.
I want a lender as excited for the deal as the buyer is.
Okay.
Oh, we are.
So,
Yeah.
that's right.
Somebody.
There you go. There's
That's right.
the
Qualified buyers.
That's right. Anything else you guys know? Awfully quiet over there.
Any questions? Anything?
Yes, sir.
I've got one that's, I guess, personal experience and a couple deals. Like the say-do ratio. So, like, I'm going to have an email to you by 4 p.m. Like, actually make sure it gets there by 4 p.m.
Yep.
Like, do what you say you're going to do. And if it needs to be longer, that's fine. But, like, you need that expectation.
That's right.
Yes,
That's
sir.
right. That's a great one. Yeah.
So are people like shopping rates, or potentially what people do if get connected with Abby, and then next thing you know they're calling Cap Center to say what their rates are. What's the kind of the process, less restrictions? Once they get locked in, are they locked in with you? Can they go do anything, or how does that kind of work? And what are the best ways to
They
keep
can
them
always
with you
change
guys?
measures. It's not fine.
You can always
Yeah.
leave.
I mean, it's only if closing table, the
Yeah.
buyer can do. And that's where you guys need to come in and say, wait a minute, you know, we're not changing lenders, you know, unless something horrible happens in the process and things just go sideways. But we also need you to back us up to say, no, we're not changing lenders at the last minute. You know? Because they have to start over. We cannot transfer any information over to any other lender. We can't give them their credit reports, bank statements, pay stubs, all that's just for us. So they got to start from the very beginning. Do we have an appraisal? Do we not have an appraisal? You know, so they're starting from scratch again. And it's just helpful when we as a team back each other up and just say that's not a good idea.
Well, and it's hard because we all want the best for our clients. We want the best price, we want the best rate. We also want to get paid. So think about, well, like we don't have buyer agency agreements, listing agreements, that sort of thing. So think about if you put in all this work, months, gave these people advice on what repairs to do to their house, get listing photos, have a listing agreement, get an offer, and then 2 weeks down the road they say, hey, my neighbor's actually an agent and they're gonna offer 2.5, but you're offering 3. We're tearing up this listing agreement, we're going with them. We're still closing in 2 weeks though. That's what it's like when agents shop. We've helped them get to where they are, and we can't control the market, and as much as we want to control what town's rates are, we can't. So we really ask for your support and knowing that we are looking out for your client as best as we can. But it's hard when, you know, we all depend on the service we provide, the relationships we have, and our paychecks. So to have that ripped out from under us, it really, really burns. So just to put it in perspective, you know, if you guys did all that work, had a listing, had someone under contract, and then they were able to just push you to the side, I mean, that would hurt. So that's what we deal with, and that's kind of harsh, but that's our reality on the lending side, right? There are no protections that bind us in a business relationship with
Have you guys ever seen Sopranos?
Oh, and one thing I want to mention too, a lot of people are trying to go non-contingent in this market. They're going to sell their house after they purchase their new one. If we're going to make a loan to somebody, they have to make 6 payments, or I'm not going to do that. You guys can do. I'm not going to do it because our commission gets taken back. Somebody pays a loan off within 6 months, and our company gets heavily fined. So if I hear somebody say, well, I'm going to sell my house after I buy this one, I'm going to pay it off, I'm sorry, I can't help you. Because they have to make 6 payments. So, and that's a lender, that's every lender has that same overlay.
And some loan officers may not, or their company may have a different policy of the percentage they take from the loan officer after a certain amount of time. But what doesn't change is what the investor finds the bank, right? And time after time, if we have PennyMac and we've got New Res and Caliber, we've got all these investors, and PennyMac has received 6 early payoffs from us in 1 month, they're going to stop offering us prime rates because we can't deliver what we're promising. And so it impacts all of our clients today and moving forward, what rates these investors are offering. So all correspondent lenders are kind of prioritizing what their relationship is and what product offerings we get from the secondary market. And so it's important that, you know, we all kind of hold up our end of the deal and make sure that we can work with them on recast options or make 6 payments or pay a large payment early to save on some interest, and then leave $10,000 on there for a couple months, and then we'll work with them. But sometimes it takes us hard conversations.
So a lot of folks don't know that, but we can.
Any other questions? I saw some hands come up. Any other questions?
I've just got one. What's the general process or how you guys approach bridge loans? So speaking of a similar situation, a buyer goes out and buys a property, they want to take that equity and roll it into the next property, but maybe they don't close on the sale of their current property until after their new home is scheduled to close. Like, what do you guys recommend in that circumstance, or how do you handle it?
We offer bridge loans. It's not a cheap loan to get, because 9 times out of 10, the borrower is not going to make a payment on that loan. So there's an origination fee and some costs to it. But it is a good option for folks that want to get their money now to put down on the new house. I'm working on one right now, and basically what we'll do is lend them 70% of the appraised value, less anything that they owe on the mortgage. It's free and clear, then they can obviously get a lot more out, but that is a good option. Another option is to set it up as like a first and a second mortgage, set the second mortgage up for what they want their down payment to be, and then they can pay that loan off, and then they keep their first mortgage. So it just depends on, again, this situation, how much equity they have in their current house. Do they qualify for the bridge loan? Because the bridge loan, what I try to do with the bridge loan is take the bridge loan and pay off their current house, and then they just have to qualify with the interest-only bridge loan payment and the new mortgage. Because a lot of folks cannot qualify with current mortgage, bridge loan payment, and new mortgage. So I try to get the bridge to pay off the house. And that's how they get the money.
Another option, this requires some kind of pre-planning, so depends on how you run your business and how kind of far out you're planning with the clients, but it's opening a home equity line on their current home. Typically, they can actually draw more funds on a home equity line than they could get with a bridge loan anyways, and the fees to open a home equity line and or penalties for early payoff are much less than a bridge loan. So it's case by case, buyer's needs, and how we feel like we can best strategize it. But that typically requires a few months of pre-planning because any sort of penalty for early payoff on a HELOC is anywhere from 6 months to 24 months. I've seen across the board with different products, and that doesn't mean it can't sit at zero during that time. It just can't be paid and closed. And if it is paid and closed, then what are the costs? If it's $2,000 is way less than the cost for a bridge loan. So open a HELOC, take the risk of the early payoff penalty, but you're still saving a lot of money compared to the fees that you would incur taking out a bridge.
Thank you.
Thank you, guys.
What would you say the biggest reason for different interest rates between companies would be? Because I've had some shop too, and there's drastic differences, but then at the end there were fees that weren't disclosed, things like that. So what's the best objection?
That's your answer right there. Fees that weren't disclosed.
There you go.
Yeah.
Sold.
Points that they didn't disclose to get the rate that they're quoting.
There's a lot of different variables that go into that. Each bank and correspondent lender, they're all rated differently by each investor. So you're going to have somebody that only sells to, say, Penny she mentioned earlier, then Penny's Bank's going to give them a better kind of premium rate overall. Yeah. So I guess that's the biggest one, but outside you just got to be careful too.
I just always ask them to get an estimate because I can say your rate's 5%, and I can get you 5%,
It's gonna cost you.
but it's going to cost you $30,000.
Yeah.
So it's just best to always get the numbers. What do they charge you in fees?
And also,
It's also overhead. So not all companies are created equal. You've got a lot of online lenders. Their overhead's less than folks that are local. They got people in the office, things like that. So you got correspondent lenders, you got wholesalers, brokers, that sort of thing. And the cost basis is different with all of them. Your brokers, they can change how much they're going to get paid on a certain loan just to get a deal. We're legally not allowed to do that. So, there's differences in that. But I had someone who fell for one of the pre-screen credit calls, and by the time he got back in touch with me, he's like, yeah, I'm buying the rate down to 5.875. Can you match it? And he's sending 18 grand to do this. And so I'm wondering, who did you answer the phone from, and why have they discussed that this is a good option, right? So I ended up getting the deal, was able to kind of beat the cost that they were doing. In his eyes, he's like, this lender's got 5.875, and she's showing me 7.5. This was a few months ago, but it's okay, well, no. After I explained it to him, we closed last week, and he ended up not buying the rate down as far, only to 7%, and saving the money because I was able to talk to him. You could refinance 3 times or 5 times for the amount that you're paying for this rate. So people just don't understand, and it all just depends on the perspective of the loan officer they're talking to.
and then the other, I guess, parts of rates and how they're different from each company too is how much of a hit does that company want to take? Because we can give you, say the par rate's at 7%, we can give you a 6.5%, and still make it par, but we could be taking a hit on it as well as a bank. So it just depends on, how much of a hit the bank wants to take as well, or for that matter.
But they change every day, and There's a lot that goes into a rate. Your down payment, what type of property you're buying, what your credit score is. A lot goes into a rate these days. It's not just A or B. Those changed. They're called loan level price adjustments. And I think probably like a year and a half ago, they implemented those. So until you know exactly what they're buying, what they're putting down, what their scores are, when they're closing, do you need a 30-day lock? Do you need a 90-day lock? All that goes into the equation. So you can quote a rate for 15 days if you want, but nobody's closing in 15 days. So it's just like I said, always good that you have to ask the right questions and get stuff in writing that says this is your rate and this is what's going to cost you to get it. So that's all I can hear apples to apples.
And there are times where, I mean, that's income ratio under 45 or over 45. Everything else is the same. Pricing is different. And it can be up to 4.5% different depending on the other risk layers in the loan. So if you've got overtime calculation in there that's bringing the debt to income ratio into the lower 40s, but then there's something that happens and maybe this year it's declining and we can't use it anymore and it pops up to 48, they still qualify, they still get the loan, but mid-process their pricing might change and we have no control over that. So when they're shopping lenders, you might have a lender that is looking at income differently, and that could be a reason as well.
Yeah, when they're shopping lenders too, make sure they do it on the same day. Because one day they come to us, the price is worse than it is the following day. It changes. So if they're going for us, we're at a 7. Well, the next day we're at a 6, 6.5. Well, then they were at this average. They're still quoting us at a 7 before. So it changes a lot.
Yeah, if they send us an estimate from a competitor, it has to be the same day, dated the same day, not illegal. It's completely different in a week, so it has to be the same time frame.
Do y'all have like a second opinion program or something?
Yes, we do. If your folks are already pre-qualified somewhere else, one way to encourage them to use your trusted lenders, but also to make sure that they are, they're going to do their due diligence, they're going to shop. They can come to us, they can provide us with an estimate they've been given. We can't go off word of mouth. We got to really see how we stand up to the competition in the market, and then we'll get a $100 gift card, whether they do less or not.
Use a gift card. It's like one night of groceries. One night. Maybe. We're not getting more for one.
Don't shop the organics. Yeah.
Thank you all very much.
It's been
Yeah,
helpful.
appreciate it.